It's time for Jim and Stop Trading.
I can't find any sellers here in Oracle up 90. Carl, maybe this is going to be the one that goes to be up 100 and be $1 trillion stock by the end of the day. I think it is certainly doable, and I think that when you heard Vlad Tenev, the CEO of Robinhood, talk about how people need to what should own more individual stock, and then you get up at 3, and then you watch Oracle trading up mostly through Robinhood and be able to get a real transparent look.
Did Jim Cramer just say Oracle could hit $1 trillion? You heard that right. With Oracle's stock up nearly 90% and retail traders on Robinhood fueling the surge, some believe Oracle could become the next tech giant to join Apple, Microsoft, and Nvidia in the $1 trillion club. But is this a true reflection of Oracle's long-term strength, or just another wave of market hype? Let's break it down. Welcome back to the channel. Today we're diving deep into Oracle's meteoric rise, Jim Cramer's bold prediction, and how retail investors, yes, everyday traders, might be playing a bigger role than Wall Street likes to admit. If you're new here, we cover the biggest stories in stocks, markets, and business. Make sure to subscribe and drop a like if you find value in these breakdowns. It really helps us grow. Now let's jump into Oracle's incredible momentum. Oracle has been on fire. The stock is up nearly 90%, shocking even the most seasoned analysts. The reason? Oracle is no longer just a database company. Over the last few years, Oracle has aggressively shifted into cloud computing, competing directly with Amazon's AWS, Microsoft Azure, and Google Cloud. One of Oracle's biggest growth drivers has been its focus on AI integration. In fact, many AI companies rely on Oracle's infrastructure to handle their workloads. With AI demand booming, Oracle finds itself in the middle of one of the biggest tech revolutions of our time, and investors are taking notice. Oracle's revenue growth has accelerated, margins are improving, and the company has been delivering strong earnings reports. For longtime shareholders, this rally feels like long-awaited recognition. But for new investors, the question is whether they're jumping in at the top or just at the beginning of Oracle's next chapter. Now, let's talk about the big number, $1 trillion. At its current valuation, Oracle still trails behind tech titans like Apple, Microsoft, and Nvidia. But Jim Cramer's point is simple. With momentum this strong, the milestone is within reach. To understand how bold this prediction is, let's compare. Apple is worth around $3 trillion, Microsoft about $3 trillion, and Nvidia is racing past $2 trillion thanks to its dominance in AI chips. Oracle, on the other hand, has traditionally been valued much lower because it wasn't seen as an innovation leader. But if Oracle can keep delivering double-digit growth in cloud and AI-related services, investors could start re-rating the stock. In other words, the market might begin valuing Oracle like a modern growth company, not just a legacy database firm. The $1 trillion race isn't just symbolic. It signals investor confidence that a company has reached elite status in technology and business. The question is, does Oracle really belong in that club, or is this excitement running ahead of reality? This is where Cramer's comments get even more interesting. He pointed out that much of Oracle's trading activity has been flowing through Robinhood, the app that brought millions of new retail traders into the market. Now, some critics have long dismissed Robinhood as a casino for inexperienced traders. But Cramer flips that narrative. He says this surge proves retail investors are becoming a serious force in the market, driving liquidity, pushing momentum, and even shaping which companies get attention. Think about it. A few years ago, GameStop and AMC showed us the raw power of coordinated retail trading. Now, with Oracle, we may be seeing something new, not just meme stock hype, but retail investors backing a serious tech giant with real fundamentals. This could signal a cultural shift. Retail traders are no longer just chasing risky bets. They're influencing major blue-chip companies. That's a dynamic Wall Street can't ignore. Of course, we can't just take Cramer's excitement at face value. There are real risks here. First, competition. Oracle is up against AWS, Microsoft, and Google, three of the biggest players in cloud computing. Each of them has far larger ecosystems, deeper pockets, and global dominance. For Oracle to truly carve out a $1 trillion valuation, it needs to prove it can consistently win customers from those giants. Second, valuation. A 90% rally in less than a year raises concerns about whether the stock has gotten ahead of itself. Investors who chase at the top risk getting burned if Oracle's next earnings report disappoints. Third, the retail effect cuts both ways. Yes, Robinhood traders can push stocks higher, but they can also sell just as quickly if sentiment changes. Momentum can be fragile, and one negative headline could reverse the trend. Still, there are big rewards too. Oracle's partnerships in AI, its strong recurring revenue base, and its global enterprise relationships give it a unique position. If it executes well, Oracle could sustain its growth and prove that this rally isn't just hype, but a new era for the company. So, Jim Cramer believes Oracle could be the next trillion-dollar stock fueled by retail. Traders on Robinhood and the company's massive shift into AI and cloud computing. The potential is there, but so are the risks. The trillion-dollar club is reserved for the very best of the best, and Oracle still has a lot to prove before it joins Apple, Microsoft, and Nvidia at the top. But one thing is undeniable: retail. Investors are now part of the story. They're not just bystanders. They're actively shaping the future of the stock market.